Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 28th of September, 2021. Alright everyone, let's get into it. So I was talking yesterday about kind of Virgil Griffith and his case and how it was kind of being held yesterday, or the trial was being held yesterday. And in a bit of a, I guess like a surprise, he just straight up pleaded guilty to the charges. There was no kind of like long form trial or anything like that. He went into court, judge was there and everything, of course, lawyers and all that sort of stuff. And apparently he just pleaded guilty and has made a plea agreement with the government for a recommended 5 to 6 year sentence. So obviously this isn't the kind of like resolution that we would want to see here. This is really shitty. The fact that he felt the need to plead guilty without even kind of fighting his case means that either his lawyers told him that he had no chance of kind of like winning the case, taking the plea bargain the plea agreement was the right path forward, but I don't really have any details outside of that. But he won't be sentenced until January, and apparently it's up to the judge now. So the judge can go any way they want, essentially, from my understanding. They can either accept this plea agreement and say, okay, yes, that's fine, you'll do 5 to 6 years in prison, or they can say, well, no, I don't accept this, I recommend the full 20-year sentence because he was facing up to 20 years, or the judge could be really kind of like lenient and basically say, well, you know, I'll just do it as time served. You won't actually have to serve any time in prison. Maybe he gets some community service or stuff like that. I don't know which way it's going to go. I don't know enough about the case. I don't know enough about the American kind of like justice system, so I'm not going to make any kind of comments on that. But just generally, this is just a shitty outcome for Virgil. I think it's, I mean, as I explained yesterday, I don't think he exactly did anything wrong. Obviously, going to North Korea and actually giving the presentation was stupid to begin with. I'm not excusing that. I'm not saying that what he did was smart or anything. But at the end of the day, it feels like the government's just making an example of him, like I mentioned yesterday. So I don't think we'll be hearing much about this until January. I think it's January 13th, maybe the sentence date. And then we'll see what happens there. And obviously, I'm hoping that the judge kind of like, has leniency here and sees what's going on and kind of like has some sense. But you never know, right? It definitely varies judge to judge. I don't know anything about the judge that's kind of like overseeing this case. So we'll have to wait and see. And I mean, he kind of like was keeping us updated with this sort of stuff and has his thread that I said for you guys to go check out yesterday. But there was a bunch of other people making comments about this. I don't know exactly where it is. It may be appended to a memes thread. If I scroll down through his thread here, I think he was appending some, people's kind of like sentiments around this and stuff like that. So people like Nick Johnson, who's a long-time Ethereum core developer, saying that, he was devastated and just doesn't really make much sense. Gabrielle Shapiro here, who's actually a lawyer, basically said 5 to 6 years for amorphous conspiracy to provide services is a travesty. When the indictment first dropped, I, like a lot of the others, assumed that there must be something more serious than a more mere general Ethereum presentation involved, but nope. And then Jake Chavinsky, who's another lawyer in this space, says, I'm hopeful he'll end up with a sentence of time served. He has some of the best defense lawyers in the country, but it's in Judge Castell's hands now. I mean, that's just what I said then. So yeah, sad to see, but we'll have to kind of like see what happens in January. I mean, I'm hoping obviously for his sake that he's going to be able to get through this. Best case scenario is time served. Worst case is 20 years. Middle case, I guess, is the judge accepting his plea bargain of 5 to 6 years, which is still shit. I mean, spending that amount of time in prison is crazy. Like, whenever I think about this sort of stuff and think about prison, like you always hear about it in like, you're watching TV shows, movies, maybe you hear about it on the news, but unless you actually go to prison, you don't know what the experience is like, but you really think through it and you're like, obviously it's not a fun time. It's really, really, really shit. Like, I don't think, in my mind, any crime is really worth going to prison for. It just doesn't really make much sense to me. I know this may seem obvious, but it's just something that I've been thinking about since yesterday, especially since I saw this, because this news came out about like an hour after I recorded yesterday's refuel, and I was kind of thinking to myself, like, just in being in COVID lockdowns as well. Like, not that COVID lockdowns is anything like being in prison, of course, but it's kind of like COVID lockdowns are shit, right? You feel really bad about it. You're stuck at home. You can't go anywhere. You feel kind of like a criminal if you're breaking some of the rules of going going somewhere where you shouldn't, or going outside of kind of like, yeah, or spending more time exercising than you're allowed to and stuff like that. But think about like that and how crappy that feels for those of us who have experienced lockdowns. I know a lot of fellow Aussies have experienced that, and then apply that to something like prison, where literally like you are, there's armed guards around you 24/7. Your entire life is controlled by the prison. Like they tell you when to get up, when to eat, when to go to sleep, all that sort of stuff. And you have really hardly any freedoms to do anything. And you're stuck there for 6 years, like 5 to 6 years in Virgil's case. So yeah, just thinking about that over the last 24 hours has been quite crazy. And it depends on the person too. Like Virgil isn't a hardened criminal who's been doing bad things and illegal things for years. He literally went and did something in North Korea where he was teaching, gave a presentation on Ethereum, and now he's facing, getting sent to prison over it. So. And then you think about like all the people who get away with much worse stuff. Like think about all the white collar crime that basically goes completely unpunished. Like it doesn't matter if you got caught money laundering, you got caught kind of like siphoning money siphoning money off companies or whatever, like insider trading. There's hardly anyone who goes to prison over that, especially not for 5 to 6 years. A lot of the time, they end up paying a fine, or they'll basically get off of it with just losing their job at the firm or that they were at or whatever. But a lot of the time, it's just not they don't end up in prison. Whereas Virgil, obviously, he was charged with breaking sanctions, which is a serious offense. But you have to contextualize that. It's not like he leaked state secrets, like U.S. state secrets, to North Korea. He presented a PowerPoint presentation on Ethereum that is freely available on the internet. Like none of that information was privileged or anything like that. But yeah, I mean, I spoke about that yesterday, but just something that I had thought about over the last 24 hours with regards to kind of like just what Virgil's facing here, and I can only imagine what he's feeling. So I'm hoping that, come January, the judge kind of like sees sense here and gives him time served. But, I guess like hopefully it's not the worst case scenario where the judge basically says, no, you're going to prison for 20 years. Like that would be crazy. And I know there's been other examples of this within the crypto ecosystem, like Ross Ulbricht, for example, who's served, I mentioned yesterday, is serving multiple life sentences for running Silk Road, which I don't think the punishment fit the crime. Obviously, what Ross did was a criminal activity, but at the same time, he's been sent to prison longer than drug lords get sent to prison, like the actual manufacturers, the actual distributors of this stuff. And that was obviously just the US government making an example of him, just like they have done with Virgil. So, yeah, lots of examples of this through the justice system. It is definitely far from perfect, so I'm hoping that come January, Virgil will have a better outcome than he did over the last 24 hours. All right, speaking of governments doing shitty things, Frank Sparrow shared an article from the block, I think earlier today, basically saying CoinGecko and CoinMarketCap have now been blocked by China's internet firewall. And this comes, I guess, like as the latest crackdown from China over crypto. Like I mentioned the other day, how they banned crypto again, and they're basically cracking down on exchanges, saying that they can't service mainland Chinese investors anymore. From what I'm seeing and hearing from a few people I know in China, they just get around this through VPNs and stuff like that. They're still doing OTC trades, but obviously there's like a massive push to kind of like clamp down on all the crypto activity in China. And I think yesterday, Sparkpool also announced that they're ceasing operations as well. So they're the second biggest Ethereum mining pool. They're ceasing operations by September 30. Their mining operations because of this crackdown. So it's definitely real. It's not like your traditional kind of like FUD that has come out before. Maybe the other day I presented it as that, but the crackdown definitely is real. But as I mentioned the other day, I don't think it's actually like structurally really, really bad over the kind of like the long term for China to ban things. I mean, think of all the not just the $1 trillion companies, but the massive internet tech companies in the US that were founded in the US. They're still global companies that have market caps of hundreds of billions of trillions of dollars. So I don't think, China's going to exactly stifle crypto adoption. Yes, they have a big population and everything like that. But, I don't see like the US or kind of like Europe outright banning these things. Maybe parts of Europe might. I don't see other parts of Asia outlawing this like China has. I don't see many countries going the path that China has here. So we'll have to see how it plays out, of course, but as much noise as the SEC has been making around crypto and just regulators in general in the US, there's no way they're going to be able to just outright ban it. That's just not what happens in the US, and I think it would be very hard for them to do that just generally because of the way the US kind of like I guess, political system works. And as I said before, I'm not an expert on any of that stuff, but they're gonna, it's completely different to the way kind of like the CCP operates in China, of course. But yeah, I guess like they can still get around these blocks with VPNs, but the exchanges, it's a lot harder because the exchanges obviously required KYC, and they're just going to shut down their operations, the ones that are located in China, and ban Chinese kind of like investors. But apparently there's still a vibrant kind of, I guess, OTC market going on there. So, yeah, the Chinese investors are still able to buy and sell crypto. It's just a lot more cumbersome for them to do so at this point in time. All right, so a few things to talk about with the Layer 2 ecosystem. So DCInvestor put out an interesting tweet yesterday where he said, a universe of varied L2s using Ethereum for security is an incredibly decentralized, market-driven future. Decentralized apps on L1 ignited a Cambrian explosion of innovation. L2s will do the same, while scaling participation by orders of magnitude. What a time to be alive. And then I replied saying the Layer 2 era has begun. And if you've been watching the refuel for months, I have been saying, similar things to what DC says here, but I think he puts it in a really great way, where he basically says that, L2, he basically implies that L2 opens up a whole new design space for, for people building, for developers, for people building kind of like things and people innovating, and they're going to be able to build apps that there just hasn't been possible to build on L1. And as I mentioned yesterday, the compute layer is a commodity at this point in time, but the decentralization security layer is not. So we can keep Ethereum decentralized and secure at layer 1, and then layer 2 we can have all this innovation happening, all of these apps being built that are just like definitely not possible in layer 1 Ethereum. And there's been rumblings about things like decentralized social media. Arver seems to be building a decentralized Twitter. There's not much information about that yet. I'm curious to know if they're actually going to be doing it using a layer 2, or maybe they create their own side chain or something like that. It'd be really cool if they use the layer 2 to do it, because I think that there are some layer 2s out there that will definitely be able to handle the load of that. For example, Reddit has committed to building with Arbitrum already, so there's already an example of a social media kind of like platform working with layer 2 technology, and Aave has always been very Ethereum aligned, so I'm sure they would prefer to do this on a layer 2 on Ethereum rather than I guess like a side chain. But either way, still it would still be fine, I think. But yeah, following on from DC's tweet here, we also had Polynya, who I talk about a lot on the refuel lately, saying, they talk about modular blockchains a lot, not L1s and L2s. And I'm just quoting the tweet that they said here. To me, execution, security, and data availability layers are equally important, and I've observed the hierarchical nomenclature has a tendency to ignite tribalism, a hangover from the monolithic perspective. And then they go on to say, when I talk about StarkNet, I just talk about StarkNet. It will leverage whatever the best security and data availability layers are. Never mentioned Ethereum, so please stop sending me angry messages about ETH Maxi. I'm not interested in tribalism. Build a better security layer instead. I really appreciate Polynya's kind of approach here, because I think I mentioned this yesterday. Ethereum is the best security and data availability layer available today for layer 2s to tap into. And then these layer 2s, obviously the ones that Polynya talks about a lot, of like StarkNet and ZK Sync, and Hermes, the ZK rollup stuff, the amazing execution engines that run on top at kind of like L2. But as Polynya says here, they don't refer to it as L1s and L2s. It's just referred to as execution, security, and data availability layers, which I think the L1 and L2 term is fine for, I guess, like the mainstream. It lets them kind of, I guess, latch onto something easy to understand. I don't think we're going to be able to educate the mainstream, or nor should they really have to know or care about the difference between the, execution, security, and data availability layers. They should really only, they shouldn't even have to care about L1 versus L2. But I think I guess when I say mainstream, I mean mainstream within crypto, and then you have like the really technical people, the people who kind of like pay attention to this stuff, like at the lowest levels, like people reading my newsletter, watching the refuel, of course. All of you doing that, definitely you want to know the difference between these things, but most people don't. Most people don't have to either. But I still think for what we talk about on the refuel a lot, I think it's important to realize that layer 2s, what we know as layer 2s, or the execution layer, it can tap into any security and data availability layer it wants to. It doesn't have to just use Ethereum. But the logic flows is that, well, if you're building an execution engine, then you should use the most secure kind of like layer to build on top of. And right now that's Ethereum, and Ethereum will have better data availability with sharding. But before Ethereum gets sharding, there's probably going to be better data availability layers. There's going to be Polygon Avail, Celestia. I think a few others out there. Can't remember the names, but there's going to be those before sharding comes along. So maybe layer 2s decide to use that. And then we're going to have hybrids like the Validiums and the Volitions of the world, where they have off-chain data availability. Or kind of like with a volition, you have the choice of off-chain or on-chain. So, and you kind of like choose where you want your data to be stored. So from that point of view, it's always good to kind of, I guess, understand how the language is evolving, because, you know, the term modular blockchain hasn't actually been used by most people at this point. I think Polynya may have been the one who coined it, or maybe someone else did, but he's definitely the one who popularized it. I don't know if it's a he or she, by the way, but I just say he because it's a habit. So excuse me, Polynya, if I'm getting that wrong. Modular blockchain, execution security, and data availability layer. It's basically saying that you can like mix and match between these things, and you want to leverage the best that's available at that point in time. So it's up to us as an Ethereum kind of ecosystem and community to ensure that Ethereum is the best security and data availability layer, and then we can have the most awesome kind of like execution layers, the layer 2s, building on top of it. Now, is Ethereum going to be the best data availability layer going into the future? I don't know if it actually will be. I think it will be the best security layer for sure. I don't think anything's going to come close to that unless Bitcoin adds the functionality to verify Starks and all that sort of stuff, but I don't think it will. So Ethereum will be the best security layer. But when it comes to optimizing just for data availability, like a Polygon Avail or a Celestia, they will probably do a better job than Ethereum does, just simply because that they are not optimizing as much for security as they are for data availability. Whereas Ethereum is trying to do both. It's trying to do security and data availability because it has security in the form of its decentralization, keeping layer 1 as simple as possible, making sure that we don't kind of increase the gas limit too much, make it hard for people to run nodes, and doing data availability through sharding, which obviously is still a little while out, whereas, as far as I know, Avail and Celestia are just simply focusing all their attention on the data availability aspect. But it doesn't mean it has to be like an either or. It can be a and. You can use Ethereum and Celestia and Avail and whatever else. It doesn't matter. Or some off-chain data availability committee that it doesn't even have a specific name to it. I mean, there's going to be things like ZK Porter as well, and of course StarkNet and all of StarkWare stuff that they're building, which I'm going to talk about in a sec. But yeah, I mean, it's just like it really is the era of layer 2. Like we haven't, or the era, I guess, of the execution layer. We really haven't seen anything like this before in the ecosystem. Not even with, not just within Ethereum, but within crypto more generally. It feels like, and I've discussed this a lot on the Refuel, but it really feels like we're entering like an entirely new paradigm shift here of how we view blockchains. And I mentioned how I think the monolithic ones, the monolithic L1s that have been popular from 2016 to 2021 are going to fail and go by the wayside, and they're going to make room for, the next maybe 5 years for these execution layers, which just work much, much better on both, I guess, like the security and decentralization side, but as well as the scalability side. So that's going to be really interesting to see play out there. And on that note, when I was just talking about StarkNet, Greg from Nethermind here put out a tweet today where he said, "It's hard to express how exciting StarkNet is. I think lots of devs are starting to realize the opportunity. Easy L1 to L2 messaging, fast finality, gas cost gets cheaper as more people use the network, which is the opposite of Ethereum. No lock-in time is required by fraud proofs." And then he goes on to say, the first Turing complete ZK language, arbitrary composability, and amazing dev tools. For most of ETH's history, high cost of experimentation has been a major hindrance of innovation. People aren't ready for what comes when StarkNet bulldozes this wall. And for those who don't know, StarkNet is kind of like StarkWare's generalized, I guess, like layer 2 platform, execution platform. And I've been hearing this from so many people, not just like Greg here, but a lot of people who've been working with StarkWare and StarkNet. They are saying that they're just building some really amazing stuff around zero knowledge proofs and just zero knowledge technology in general. And, DYDX is a perfect example of this. That's completely built on StarkWare's tech, and they've been doing an amazing amount of trading volume and activity on their network. And I haven't heard anyone complain about it. It seems to be working well. Like nothing seems to have gone wrong with it. So there's obviously already production stuff happening here. But as I mentioned just before, this is like the next era that we're moving into. All of this stuff happening that, as Greg says here, it's been like a high cost of experimentation on Ethereum Ethereum layer 1 that is now, that wall has kind of like been bulldozed, and now we're going to have this low cost of experimentation and a Cambrian explosion in new apps and new kind of like experiences that are leveraging Ethereum security, but and leveraging the scalability of execution layer sitting at layer 2, which I think is super, super exciting. Another kind of tweet here from StarkWare where they said the first step for DAI coming to StarkNet. So there's a vote going forward right now. It's a ratification poll for the StarkNet engineering core unit to basically, I think, accept DAI into StarkNet, which I think is cool. I mean, there's a discussion here, I think, in the forum. Yeah, you can go here, adding the StarkNet engineering core unit. So these are the first steps to getting DAI on StarkNet. And you may be wondering when StarkNet is due to come out. I think end of year, early next year, maybe, or maybe Q2. Maybe I'm getting my timelines wrong there. I would say Q1 or Q2. So it's not that far away. I mean, we're almost in Q4 now. So even if it takes like another few months, like maybe 3 to 6 months, say, that's still amazing because we have these other solutions live. Optimism, Arbitrum, a bunch of others coming out soon. Obviously ZK Sync has ZK Porter. We've got Hermes. They're going to be doing more than just payments. And there's plenty of them. And it's funny because people always ask me, like, are Arbitrum and Optimism going to be obsolete in the face of a zero-knowledge world? And it's like, not at all. I mean, I bet you like money that Arbitrum and Optimism are both working on their own ZK stuff, and they're going to be rolling that out. But in the medium term, or short to medium term, we do need these kind of like bridging solutions through optimistic rollups, and optimistic rollups have their own, I guess, kind of like benefits as well. It's not just all drawbacks. Like I know some people point to the drawback of a long withdrawal delay, but we have bridges and stuff like that happening. But like the longer term definitely is ZK rollups, Validiums, Volitions, all that sort of stuff. Like anything using ZK tech, I think is the long term arc of this sort of stuff. So that's why I've been focusing a lot of attention on that lately, and a lot of other people have. But I would kind of like temper your expectations about when a lot of this stuff will be delivered, and also when it'll be kind of like ready as Arbitrum is ready today, because getting your generalized platform to the point to where Arbitrum has gotten their generalized platform to, where there's no whitelist, anyone can deploy to it, anyone can kind of like can use it, but also having like still training wheels on, like the limits on the transactions that can happen, per second and per day, and also the cost being higher because there's not many people using it just yet. The layer 2 rollout is not going to happen overnight. I've always said it's a marathon, not a sprint. But really, I mean, at the beginning of this year, I did say in one of my predictions for this year that it would be the year of layer 2. And what I meant by that, it would be the year of layer 2's actually going live and people talking about it and realizing that the layer 2 ecosystem is just booming, like absolutely going insane. There's so many kind of like teams and people working on it, and we're just like at the starting line. So I'm super excited about it, of course. I talk about it a lot on the Refuel. But if you're not paying attention to the layer 2 stuff, if you're not just like completely, diving into all this stuff, doing all the research you can, then you're missing out, of course. Like I highly recommend doing as much research as you can on everything layer 2, because that, I believe, is where the best opportunities are going to be going forward, both from, I guess, like a financial perspective, investment perspective, but also from a social perspective. There's a lot of these teams hiring too. They're not just hiring technical people, they're hiring community managers. Being part of one of these teams is literally a rocket ship. I'm not kidding you. Like, they're going to be some of the biggest protocols within crypto. They're going to be worth lots and lots of money when they do tokens because of the fact that they are the execution layer. And you've seen how people price these execution layers. Like, all the other layer ones are execution layers as well, except Bitcoin, like for smart contracts, right? So what do you think is going to happen when layer 2s have tokens? I mean, the closest thing we have is Polygon, which has obviously layer 2s, but their most successful implementation is the POS chain, which is it's a side chain, commit chain, not a layer 2, but I think the Matic token has a $10 billion fully diluted value. So just using that as like kind of, I guess, like a relative valuation and barometer there, these protocols are going to be worth billions and billions of dollars. So if you join one of these companies early on and get an equity stake, which can be can be turned into tokens later on, it'll do wonders for you. So definitely go check out, StarkWare, Arbitrum, Optimism, Polygon, like all of those teams. I'm not going to name them all. All of the teams working on scalability, whether that be layer 2 stuff or app chains or, even teams like working on the bridges, of course, as well, are very important. And I think the bridge protocols are going to end up being worth a lot too, to kind of like the arbitrary message stuff that's happening, like Vardy Capital doing their Nova stuff. I know StarkWare is building the DAMM. Any of these things, I mean, just for your, I guess, like career trajectory, not just like on the money side, but on the social side, I couldn't think of better teams to work for right now than the Layer 2 space. And as I said, they're not just looking for technical people, community, marketing, business development, any of that sort of stuff. They're all looking for this. So definitely go visit their websites and go visit cryptocurrencyjobs.com as well. And you can kind of like see on there which roles are available for which kind of companies. As I said, I'm pretty sure all of them are hiring. And the last thing about StarkWare here is that Georgios posted that OpenZeppelin and StarkWare are kind of like working together on some standardized contracts for Cairo, which I've mentioned before is StarkWare's native kind of like programming language that's different to Solidity. And for those who don't know, OpenZeppelin is basically, I mean, they do a bunch of different things. I think they do like audits, but they do a lot of stuff around smart contracts and creating like standardized smart contracts for different kind of platforms. So it's great to see them building stuff for Cairo here, which I think is just going to push things forward. All right, so Polygon announced that Vicin Ventures has launched a $30 million fund for supporting gaming projects building on Polygon. So Vicin Ventures is a cryptocurrency venture capital fund, which is committed to ramping up investments and support in the field of decentralized gaming. So you can read the full announcement post here. It'll, of course, be linked in the YouTube description, but it's really awesome to see more focus on crypto gaming, specifically within the Polygon ecosystem, because I think Polygon is actually perfectly positioned to capture a lot of this activity, because a lot of the gaming stuff doesn't actually need like the full security of Ethereum, right? It's fine to live on a side chain, at least in the short to medium term. Maybe when the kind of like layer 2 ecosystem matures a lot more, we can get to the point where it's like really scalable. Gaming will move to that, but of course Polygon is working on those solutions as well, right? Like the Hermes stuff and generalized ZK rollups and all that sort of stuff. But when it comes to just gaming in general, crypto gaming, I was listening to a podcast today from Bankless that they did with Ariana Simpson. I recommend checking that one out. But I don't think people realize just how big the gaming wave is going to be in crypto. If you look at the NFT wave and how many new people have kind of like been onboarded to crypto through the NFT mania or the NFT kind of like growth, times that by like at least 10 for gaming. There is a strong overlap between people who like NFTs and like games, but also the gaming industry is absolutely massive. Like gaming isn't just like people sitting at their PCs anymore. It's everything. That's like you can do PC gaming, you can do console gaming, mobile gaming is absolutely massive. There's going to be tons of mobile games coming out that have tied to crypto. I mean, look at Axie Infinity. That's a mobile game, and it's extremely popular. It caught a lot of people off guard by how quickly it grew. So I think, you know, these kind of like venture capital funds and kind of like all these teams working on funding crypto gaming, bringing it to bringing it to life, are going to get an awesome return on investment here. Because I mean, I think people are severely underestimating how many people will be onboarded through gaming, probably more than anything else. And NFTs in gaming, obviously the lines are blurred there, because you can have NFT items within the games. Obviously, with like Axie Infinity, you have the Axies that are NFTs and stuff like that. But there's other aspects to NFTs as well. Like there's the art stuff, there's collectibles and all that sort of stuff. But those are going to blur together, and you're going to have like an explosion of the NFT kind of community and mania coupled with the gaming community and mania. And there's going to be so much overlap that they're just going to feed off each other. And I think it's going to be like a really big deal. So that's something that I'm paying attention to, especially. And I think a lot of you would be as well, considering the growth that Axie Infinity has had. I'm pretty sure you've all seen that by now. It's just been crazy to watch play out. All right, so yesterday there was, I think, the largest ever transaction fee paid on Ethereum. That was an error between Bitfinex and Diversify. So I mentioned the other day that Bitfinex has a bridge to Diversify. I don't know if this was that bridge that I was talking about, or whether it was just a normal withdrawal to the Diversify kind of like wallet here, but the gas price, the fee that was paid was 7,676 ETH, or at the time it was worth $23 million worth of ETH. And the thing is, this wasn't burned either. With EIP 1559, only the base fee gets burned. And you can see here the base fee was only 58 Gwei. So only, I think it was like $25 worth of ETH was burned in this transaction, whereas the rest of that money went to the miner that mined the block. as in the form of a tip. So you can see here that the error was this person setting the max fee per gas at 115 million Gwei, and then the max priority fee per gas at 53 million Gwei, and they were actually refunded 9,000 ETH. So if this wasn't a 1559 style transaction, they would have ended up paying this 9,000 ETH basically, which is crazy, of course. But the good news is that the funds were actually returned in the end from the miner to the kind of like correct account here, which, I mean, obviously that's a good Samaritan thing to do. They didn't have to do that. I think that 762. I think they returned like most of the ETH. It seems that they kept about 50 ETH for themselves, I think, as just a fee that they took for themselves, which is still not a kind of like low amount of money there. Obviously 6 digits. But I like Diversify's tweet here where they said the blockchain is immutable, but the revolution we are part of is defined by our values as humans. Thank you to the miner of block such and such, who we can confirm is returning all the ETH that were incorrectly paid today as a transaction fee. A post-mortem will follow tomorrow. I haven't seen the post-mortem yet, but I'm sure it was a fat finger or some kind of like bug that went on within the transaction here, but good to see it returned, and I completely agree with Diversify. It doesn't matter if the blockchain's immutable. We're all humans at the end of the day. The miner felt it in his heart to basically, or she basically kind of like send the funds back, which I think just shows kind of like the Ethereum community's power and how nice the Ethereum community is. But maybe in the future there won't be someone as nice as that, and they'll just keep the money for themselves. We'll have to see how that all plays out, of course. Interesting tweet here from Value Disciple, who's part of the Index Coop, and they put out product lines being supported by the Index Coop. Currently, there's sector indices, the DPI, MVI, and the data index, structured indices like the Fly, and in the pipeline, they have a bunch of different products like the Pay and YHI yield indices, ecosystem indices being PDI, NFT indices, JPG, all infused with index DNA. So all infused with the index tokens, of course. I just thought it was a cool little tweet here to point out that the products Index Coop Co-op has today and will have in the future. Disclosure, of course, like I hold index tokens, and through my advisory to Set, I have exposure to Index because Set was the ones who originally launched it. But I think the Index Co-op is still one of the best kind of like DeFi platforms or apps or projects that are out there right now. They're making great progress, and they're one of the best DAOs as well. So definitely go check them out if you haven't already. And this is something I just want to quickly power through, but I wrote more about it in today's newsletter, so definitely go check it out. But this person, Matt Veloso, quote tweeted Chris Dixon here, one of Chris Dixon's tweets, where Chris Dixon said, tokens give users property rights, the ability to own a piece of the internet. And then Matt Veloso, who's a technical advisor to the CEO at Microsoft, so not like a nobody, definitely someone who I guess like is not a random or like some just random anon on Twitter. He puts in quotes, own a piece of the internet, and then laughed at it. Now, today's newsletter went into this deeper, so you can go read that. But I just wanted to point out that these kinds of people that I've been seeing lately who are like anti-crypto, anti-innovation, think that it's all just a Ponzi and all scams, they're just simply not going to make it. Like, betting against innovation in history has been the worst thing to do, especially when it comes to technological innovation. Betting against, I mean, look at the famous example, Paul Krugman, who said that he said in 1998 that by 2005, the internet's impact on the economy will be no greater than the fax machines. He was so completely stupidly wrong. It's not even like worth discussing it. Like, and he bet against that. If he had instead bet on the internet, he would have been able to kind of like ride through the dot-com bubble early on, would have been able to ride the internet up and just like invest in it over time, and it would have been better off. And there's countless examples of this, of people betting against innovation, betting against new technologies for a variety of different reasons. I think with Matt here, he definitely is in like the Web 2 world, because of his high up position within Microsoft and stuff like that. So maybe he's just protecting his vested interests, but there's just so much ignorance in this, in kind of like, outside of the crypto ecosystem, that it just signals that we're really early, and it signals that we have a lot more work to do when it comes to the education of these sorts of people. So anyway, you can read the newsletter for more details on this, but I think I'm going to wrap it up there for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give that video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.